I'm Meredith Wood. I'm the VP of Content here at Fundera. Today I'm joined by Stu with BlueVine,
Hey guys.
who is the VP of Sales there. So I'd like to just kick off by learning a little bit about you and how long you've been at BlueVine.
Yeah. So I've been with BlueVine now for about 3 years. Actually, a little bit more than 3 years. And I've been in the small business lending space now for about 8 years. Was with On Deck Capital before this, and was working at Venmo prior. But yeah, I think what brought me to BlueVine and just brought me to the space in general is just my love for small businesses. My family, my grandpa owned a trucking business. My father owned multiple businesses when I was a kid. My mom owns a center for autistic children now. So
That's
just
really cool.
I love small businesses.
That's awesome. So Fundera is a go-to financial resource for business owners, helping them make the best financial decisions for their business, sorting through things such as loans or credit cards or banking. And I'm excited to have BlueVine here today because they're a great partner to Fundera that offer really amazing products for cash flow to small businesses. But without going into the details of those products today, we want to talk about the issue that those products do address, which is cash flow. Managing cash flow is not the sexiest subject in the world, but when you own a business, it is absolutely the most important. It's one of the number one reasons that small businesses do fail is if they are not able to manage their cash flow properly. So just to jump in on this subject today, we want to start by asking you, which is, how do you describe cash flow? Like, what is your definition of cash flow?
Yeah, so cash flow is truly just looking at the revenue that's coming in and the expenses going out. So really it's just taking a look at the bank statement and seeing all the money that's coming into the business and then taking a look at all the withdrawals and the money going out.
That's really interesting. So something that I feel like a lot of business owners ask me, which I frankly didn't know the answer to when I first started working at Fundera, was this idea of being cash flow positive and what that is and how it is not necessarily profitability.
Yeah. So yes, cash flow positivity is actually really important for businesses. At the end of the day, it kind of falls along those same lines of like personal finance. You want to make sure that you are spending less money than what you're actually making. So for businesses, especially new businesses, that can be really, really hard to try to manage. You're not always sure of the expenses that might pop up. As well, getting started, I think sometimes we tend to be very optimistic when starting something new. We think the best is going to happen. So trying to manage for cash flow positivity, again, it's just really, really difficult for business owners. But at the end of the day, it really just comes down to making sure that you are spending less than what you actually have coming in.
And how is that different than profitability?
Yeah, so when it comes to profitability is more of like a big picture view of the overall health of that business from a financial standpoint. So it's taking a look at the end of the year, maybe the end of the fiscal year, taking a look at all of the expenses for that business. So rent, taxes, payroll tax. Once you deduct all of that from the income that came in, you'll be left over with your profits.
Yeah, that's great. I think something that's so interesting about the idea of cash flow is in its essence, it's so simple. You want to make more than you coming in than you have going out. And I think that part of what the issues that businesses face is that like the schedule of what comes in is not always on the same schedule as what's coming out, and that's where it presents a lot of issues. But I'm just kind of curious, like, while it is a simple idea, in your experience, what have you found to be like the most actionable tips for a business owner to sort of manage their cash flow well, be on top of these things from day one?
Yeah, that's actually it's a good question. I think from day one it starts with tracking the cash flow. It's surprising to hear from business owners of really, really good businesses because again, I think every single business at some point in time is going to run into cash flow issues.
Yeah.
And I actually think that most small businesses will probably run into a cash flow issue at least once a year. Not by their own design, but sometimes they probably could have had a little bit more foresight into the issue. And that starts with tracking, whether it be just coming up with a simple spreadsheet of looking at all of the sources of income, what's coming in on a monthly basis or maybe even on a weekly basis, and then taking a look at your expenses and just keeping track of it. So yeah, I think that's where business owners probably should start, just to help avoid some of those issues.
Do you have any favorite apps or things that you recommend for tracking cash flow?
Yeah, I'm actually a little old school here, so I actually love spreadsheets. I do it personally. I've got a plethora of Google Doc sheets just to keep track of my own personal cash flow.
Yeah, that's great. I've also found like we love QuickBooks here at Fundera, and we also like Xero a lot. And there's a lot of great accounting softwares.
Yep.
What's really interesting about these accounting softwares is many of them have these sort of app ecosystems where you can use the accounting software itself to track cash flow, but some of them connect with different apps like Bill.com, for example, that helps you really understand sort of the behavior of when you're getting paid and then when you're having to pay out, which I think can be really helpful, especially if you're in a business that has a lot of transactions, but not necessarily like a restaurant where you get a lot of daily debits and you have an average idea of what you're making in a day. But if you are like a service-based B2B business where you are invoicing people and waiting for them to pay you, that helps you get a really good idea and picture of your cash flow. So that being said, I think the thing that the cash flow issues that can come up, let's use those two examples. You have a restaurant, and while you start to get an understanding of the behavior of your restaurant and what you make on an average day, the things that can really cause issues with your cash flow or the unexpected is something like a machine breaks down, your oven breaks down, and it's an expense you did not expect. But on the flip side, if you're a business that's billing your customers, let's say you run a design agency, and you bill them and you have net 30 or you have net 45 or net 90, depending on what that is, that can affect how long it is until you get paid, and then you've got the issue of some people do not pay you on time as is.
Yep.
And that can also create this more of a roller coaster cash flow because you have a lot of different clients on different pay dates that are paying sort of within that time period when they so please, or they're paying late. And so knowing that those can be like two examples of times your cash flow gets a little bit disrupted, I'm kind of curious how, in your experience, you've seen people use financing products, whether it's a line of credit or invoice financing or even a business credit card to smooth those cash flow issues out.
Yeah, that's a great question. So I'll actually start with the restaurants, and I actually have a personal example here. Early in my lending career, I came across a business that was just having rapid success. They'd been around. It was a restaurant based in LA, and they'd been around for a little over a year at this point. But they had recently been featured on one of those cooking shows, or I think it was like diners, dives, and drive-ins or something like that. Which is great publicity for the business.
For a young business.
For a young business, yeah. What happened there, though, is that they were averaging around $40,000 a month in income, and all of a sudden they shot up to $80,000 that next month right after there, and then they shot up to around $110,000, $120,000 for the second month. And for most business owners, I mean, hearing that sounds like this would be great. This is awesome income coming in. I think, when I spoke to that business owner, I was hearing nothing but stress in his voice. And the reason why is because his expenses also increased. And they increased faster than the income that was actually coming in. So his cash flow now became out of sync. And he needed help. And luckily, we were able to provide him some financing at the time. It was in the form of a term loan. At the time, we didn't offer a line of credit. Looking at it now, if we did, I think that would probably have been the best option for him. I think one of the beauties of a line of credit is that it kind of operates almost like an insurance policy if you use it properly. Because when those cash flow times hit, you want to make sure that you have easy access to capital to kind of help cover those gaps. On the other side, where it's invoice, where you're billing your customers and you might have a net 30 term, but instead they end up paying a lot longer. Being able to manage for that is important, and I think that's where a line of credit or even better invoice financing factoring actually comes into play. Personal example there, my mother, who I said earlier owns a Center for Autistic Children, 90% of the income is actually coming in via the state. And the state pays on a net 30 term. Also kind of going back to what you said about tips, one of the tips I've always given my mom has been make sure that you keep a big buffer, like 2 months worth of expenses in a separate account that you can always tap into. And she had been doing that. Unfortunately, some of these invoices started getting so delayed where now we were going beyond 90 days that she had actually run through her buffer. So in that situation, it was just really good that she had access to additional capital that she could pull to ensure that she didn't find herself in a super stressful situation.
Mm-hmm. That's great. I think something sort of dissecting that, there's those two cash flow issues. The one is the unexpected issues where you're experiencing massive growth, which again is a wonderful thing, but any business owner that's been through this before knows that growth can be overwhelming, or it's the emergency that happens. And then on the flip side, it's just finding out a way to really understand your business and get things to be on your terms. They fit in with your business.
Yep.
The thing that we sort of preach as part of our philosophy here at Fundera is fast cash is never the best option. So if you can avoid trying to look for financing when you're desperate, when you need something tomorrow, that's the best position you can put yourself into, because same day financing or same week financing is always going to be more expensive than financing that you take time with, has a longer application, has a higher, more due diligence. And so that's why we are a big fan of the line of credit product. It's something that every business owner should have. So if those moments of emergency present themselves, you have something to draw on immediately that has much better terms than had you gone in that moment to try to look for some financing. And pairing that with a great business credit card, which can also be there in case of emergencies. And they're kind of a nice pair because, business credit card, you can only use in a place that will accept business credit cards, and sometimes you actually need access to cash.
Yep.
Then I would say on the flip side, usually line of credit's pricing tend to be a little more competitive than a business credit card, but it's good to use them in tandem.
I'm sorry, just to add on to that, I recognize as small business owners, they're a unique breed and their time is extremely limited.
Yeah.
But when it comes to, just preparing for the future, it is important to go ahead and actually get yourself a line of credit for the business, get yourself invoice financing, have that in place before you ever need it. It will take some time, it will take some effort, but you are going to be a million times better off having that in place for when that need does arise, and I promise you it will arise, whether it be the next few months or the next year or two. But just making sure that you have that in place.
Yeah. And I think something that's really interesting to point out about the invoice financing product in general is that, at least I feel like over the course of the past 5 years, there's been sort of an evolution of that product.
Yeah.
Or companies like BlueVine, it makes invoice financing feel almost like a line of credit versus it being about a singular customer and you're factoring a singular invoice. It's more about a relationship that has, in many cases, a technology connection. They understand your QuickBooks or things of this sort. And you can sort of use your invoices in a way of collateralizing almost a line of credit, which makes it a really interesting product and very different than what you think of with traditional invoice factoring.
That's correct.
But that product really works well for B2B and businesses, right?
B2B businesses, and you do have to have net terms on your invoices.
Okay, that's really good to know. Any other final words of advice you have on people on one, cash flow, and also utilizing financing to help your cash flow?
Yeah. So yes, one bit of advice, and it really stems from the fact that you're not alone when you do run into cash flow issues. Again, it's very common, but just be prepared. Don't wait until the last minute. Make sure that you do have your finances in order ahead of time, meaning that you do apply for financing before it gets really, really bad. That will only improve your chances of actually getting approved. Also, make sure that you're spending some time to look around at the other options out there. Do what's best for you and your business. And I think Fundera does a really good job at kind of breaking down what the lenders are able to offer, what their strong suits are.
I love that. Starting early, letting yourself be in the driver's seat and being able to see what's out there, understanding it, because the landscape can be very confusing and overwhelming, and making sure you're giving yourself time to find the best option. And best can mean a lot of different things. It can mean most affordable, it can mean most flexible, it can mean fastest. It just depends on what's right for you.
That's very correct.
And I'd also add, with cash flow financing is not necessarily always the answer. It's just something to consider. Ultimately, if you cannot afford to pay back financing, it should never be something you consider. And so you do have to ask yourself that question and be able to do a real financial analysis and understanding what your capacity for debt is. So that being said, that's what we've got for today. If you have any questions about cash flow or any of the things we discussed today, you obviously can leave a comment on this video, but you can find BlueVine on Twitter, very accessible at BlueVine Capital, and Fundera at Fundera. Either way, if you have questions for one and need to get it to the other, we can also make that happen. We're really excited we got to do this today. BlueVine's a wonderful partner, definitely some good guys in the industry, So thank you.
Thank you.